Well, good morning and welcome to the trade setup right here on BloombergQuint Live. I'm Niraj Shah, and it promises to be a day in the green for a number of factors which might also be specific to the Indian markets as well. Not that the globe is sulking, by the way. So let's first quickly take a look at the globe, because I think I have a lot to talk about India. So the US markets had an okay day. I mean, it was not too bad, to be honest. I think it was looking very, very flattish for a better part of the first 2-3 hours. And then I think it perked up a little bit, as a result of which there's a bit of a rally in the US markets in Friday's session, which is actually a very good sign. Now, what does this do to the mood overall? It just improves the mood, right? I mean, we've been talking about how the stimulus measures aren't quite coming in the US, and if that doesn't happen, would it be a big drawback? I think the markets are digesting this well, maybe believing that Democrats would win, sweep over the Congress, and therefore there could be a proper stimulus in place any which ways. So, well, I think clutching at all straws to keep positive. Asia seems to be doing okay, and the SGX Nifty, the last time I checked, also seemed to be doing okay. So there is a bit of positivity and optimism around the world markets at large. And if you add to that the individual flavors in India, I think there's a lot to speak about. So just very quickly, just show you what Asia is doing. Yep, as you can see on your screen, mixed but a fair degree of green. And the SGX Nifty, of course, indicating a start which is in the green for sure. Remember, we've crossed a key channel of resistance, which is 11,550 to 11,615 trade yesterday itself. And therefore, that channel of resistance having been crossed, we of course will have individual points, but because we've broken through that, you might well have almost an unhindered run up if fundamentals support. Now the question is, are fundamentals supportive? I think they are. Just look at it from a technical perspective, and I don't mean charts perspective, but from a technical perspective. Your highest weightages in the index, IT, the high quality banks like HDFC, Kotak, etc., because of the numbers, and HDFC because of the commentary that they've given, and Reliance Industries, all three look very good for gains. All three have positive catalysts. Reliance has these money flows coming in. We all know what TCS has said already, and I'll briefly detail as to why it could be slightly longer, and banks. So all three are doing well, and that's what, nearly 50%, more than 50% of your weightage even now after the reduced weightage in banks, right? So you are around 50%. So you actually have that side of the market doing well. That's a great burst. And I won't be surprised if we actually have positive flows from FIs in the session today. I don't think too many people are over-invested in IT. It's probably market weight or otherwise. Some people might want to increase that simply because of the commentary that came in from TCS, and I'll enumerate that. By the way, the other thing, insurance companies now aid to the positive sentiment, especially HDFC Life. It's a Nifty name, remember that. And I think their September flows too have looked okay. And that's a sector that seems to have withstood the COVID hostility. And therefore, you might actually have a good session out there too, and maybe good days ahead. And again, I'll tell you why. But first, let's get to stocks. It's very important. I'm starting way early on stocks because I think what TCS has said has implications for the IT space at large, and which is why I'll just dwell a little bit upon that. Now, the stock of the day has to be TCS. It will be TCS. One, of course, they've announced the buyback, which is 5.33 crore shares, 1.42% of equity, at 3,000 rupees a share. So that's a 9% premium any which ways to the current market price. But look at the numbers and look at the statistics and look at the commentary. So this is the review, right? On a quarter-on-quarter basis, it's the best dollar revenue growth in 24 quarters. I know people are talking about this being the best in 20 quarters. We've done our math on the Bloomberg terminal. Last was Q1 FY15, 8%. This is the best dollar revenue growth in 24 quarters. The constant currency growth is at 4.8% versus mass expectations of anywhere between 2.8 to 3.5%. CLS estimate was in fact 1.9% quarter on quarter. They've come in at 4.8% quarter on quarter. This is very strong delivery and extremely strong execution in COVID times. That's the importance, viewers. They've achieved the revenue recovery in quarter 2 versus what they expected to do in quarter 3. This is a big thing as well. And what the company is saying is so important. Look at the statements. Viewers, don't get caught only in the numbers. At times, you got to feel the body language and the statement that the management has said. They are saying we are at the start of the first phase of a multi-year transformation cycle. The strong order book, deal pipeline, and continued market share gives them the confidence for the future. And they're saying that the company is very confident and very strong to benefit, positioned very strongly to benefit from a secular demand drivers. And he, of course, also Rajesh also said that we also want to say that they are in the midst of a sustainable demand recovery, and this recovery has some more legs to go. On every possible count, the management is talking about optimism, but the first line that we are at the start of the first phase of a multi-year. Can you imagine the confidence that the management has for the future? Start of the first phase. And as much as you would like to be skeptical about companies and the commentary, it is TCS, the second largest company by market cap, saying this. You have to give it credence, viewers. I think Macquarie note puts it very well. There is an Edelweiss note which pegs the target at 4,000. I'm not going that far, but what Macquarie is saying kind of enumerates what I believe personally as well. The TCS commentary, Macquarie says that the TCS commentary on demand underscores our thesis of strong digital transformation demand. They say that the margin improvement will continue driven by growth, changing hiring model in medium term, and savings in SG&A. And they have hiked the EPS estimates and the target multiples to 27 times FY22 or September 22 EPS. Now, viewers, keep in mind, you know that for an IT company, I'll just spend a little more time here because this has implications for Infosys, for Wipro, for HCL Tech. An IT company, a large portion of their expenses and logistical nightmares is also transporting people to and fro between offices and home. All of that in a work from home environment goes away. So you save on costs, you save on employee salary, employees are happy, productivity is high. I think IT companies are in a sweet spot. Watch out for TCS in the session today. A lot of people are saying there might be profit booking. Sure, there could be because it's had a very good run up, but there is no need for that because people might just come in, fresh legs might just come in and buy these names, and particularly TCS. Though Wipro could not be far behind too. They are saying that they are going to consider a buyback proposal on October 13th, which is their result date. So do watch out for Wipro as well. Anyways, the ADRs of Wipro and Infosys were up and about. It's a bit of a giveaway, but I do think that IT at large will have a rocking day today in the session. HDFC Life is the other one, which is a very interesting stock, by the way. They've reported a 45% YOY growth in annualized premium equivalent, which is the statistic to measure the growth of life insurance companies for the month of September. Not all companies have had a good one. I think ICICI Pru has had a fairly chalky one. But HDFC Life, 45% YOY growth. That is quite stellar. It shows that their digital mode of communication and sales seems to be clicking for the company. And this should augur very positively for HDFC Life, I would reckon. We would love to talk to them, of course, post the numbers. But I think this is just a very, very strong performance, and it should be paid heed to. Won't be surprised if there is a good rally in HDFC Life too in the session today. It's no longer at 625, 650. It's at about 571 or thereabouts, if I'm not wrong. So it's a stock that people would want to consider in addition to IT. I think it's a sector, selectively, on specific names, of course. But insurance is a sector that seems to have withstood this well. And the month of March will have a strong base effect for insurance in the second half. And therefore, if the AP in the first half has dipped only 5-6%, and if the second half has the strong base effect, then maybe insurance is a good sector to look at. Vedanta is out of the F&O ban. The stock movement dependent on the bids from institutional investors, the likes of LIC. So please keep that in mind because it's out of the F&O ban. There could be a lot of volatility in the session today as well because people could take fresh positions. And it was very volatile in trade yesterday as well. So please be careful. Don't be a brave heart and try and think of the price. But yes, next 2 days, depending on the institutional bids, and particularly LIC's bid for the delisting, holds the key to whether this delisting goes ahead or no. If it doesn't, then there is a downside. If it does, then your shares have an upside. It's a binary event. Please trade this carefully. Bandhan Bank update seemed okay. So advances up 20%, deposits up 34%. Liquidity coverage ratio stands at 157%. Collection efficiency at 92% across all loan categories. That's an important line as well. So interesting update from Bandhan Bank. Again, a stock that could do well. Almost all the companies, viewers, that I've highlighted today are names that could actually have fundamental reasons for not just a move today, but maybe ahead as well. So please be mindful of that. Watch out for others like Dr. Lal PathLabs and the diagnostic companies. They've had a really good run. So maybe those stocks could also be in focus. But yeah, it promises to be an IT day today. So don't forget insurance. Thanks so much for tuning into the Trade Setup.